Hi, I'm Ben Solomon. Most of you will know me as the founder and chairman of the Exodus One Foundation. Today we'll talk about part 2 of the case study, Tesla versus Chevy Volt, using the holistic business model business management layer. And please note that this is not investment advice. It is not about whether Tesla is better than the Chevy Volt or the Volt is better than the Tesla. It's about using these two vehicles, these two products, to illustrate how we can infer what's happening in the market using non-technical, at times anecdotal news stories. Okay, now that we have understood the structure of the business of both the Chevy Volt and Teslas, we can now take it to the next step and ask the question, where can these two products or companies move to? So we shift from the business management layer to the strategy evaluation map. And basically this is one layer, but because there's so much information, they have been split up into two maps. One is business management, the other one is the strategy evaluation. So we know Chevy Volt is here. It's in scope economies, and for it can either move to scale economies or it can move to differentiation. We know from the model that for it to move to a differentiation, it has to go to premium pricing. That's not going to happen. So the Chevy Volt cannot move to a differentiation. We know that since its market price is competitive, it's less than half the price of the Tesla, the Volt belongs to the lower two quadrants, and so it could move to scale economies, but that would require an upstream process standardization, as pointed out here. And since GM has announced that they are going to spend 1.4 billion, we infer that that 1.4 billion will be used to set up a manufacturing process that is dedicated to the Chevy Volt, and therefore allow it to gain scale economies. Now let's look at the Tesla. Tesla is up here in the innovation niche, and it could either move to differentiation or it could move to scale economies. But given that it is not going to move to competitive pricing, it's going to remain premium pricing, it means that Tesla's next step would be differentiation. And we can see this in the introduction of the Model X and the Roadster model. And going to the next portion, to the next market state, next framework market state, we see that it was originally, Chevrolet Volt was originally here. It could move up to mop-up, or it could move across to Clarity. And we know that since the Volt is in the hybrid market, gasoline electric hybrid market, it cannot move up to mop-up because Prius dominates that market. And so its only opportunity is to move to Clarity, where market product structure would be narrowed. Would that be possible? It has to increase. For that to happen, it has to increase the value benefit perception expectation, which with 30 to 40 mile range per charge, that's not going to happen. So the Chevrolet Volt is stuck there. If you look at Tesla is in consolidation, and it could move across to mop-up, or it can move down to Clarity. It's not going to move down to Clarity, because if it did this, it would be introducing, Tesla would be introducing new market entrants, and that's how its market would be fragmented. So therefore we know Tesla cannot move down. So Tesla has to move across to mop-up, which is aligned with its differentiation strategy. And mop-up doesn't necessarily have to mean that you have to build different new models. It could be that you increase the slight variations in the existing models so that people have slight changes within the models to suit their needs. And then we look at market economics, and Tesla is at the top and Chevrolet is at the bottom. And from the point of view of market economics, Chevrolet could move up to unit cost game if it could reduce its market number of players in the market, if it could consolidate it, or it could move across to variable cost game. This is not likely to happen. Moving up to a few dominant players, this is not something that's easy to happen because Prius dominates its market. So Chevy Volt's only choice is to move to a variable cost game by increasing the market growth. But we see that this problem still hampers its ability to increase its market growth. And so therefore, the Volt's number one priority is to get its range fixed, get its range problem fixed. If it doesn't get its range problem fixed, it is a dog, and it will remain a dog. If we look at the Tesla is an equities game. It could move back here to unit cost game or equities game, but this is what will be forced on Tesla by market conditions. So if there's a recession and it's susceptible to recessions, then what you will see is it will swing to a low market growth and to a unit cost game. And when the economy is doing well, it'll stay up in the equities game. So similarly to Tesla, in the market sustainability, as a recession occurs, then it'll shift down to low market growth, and it'll shift into viability drains profits. So Tesla has to watch out for downside economic downturns. Chevrolet is a dog, Volt is a dog, and until its 1.4 billion program gets it out of its mess and getting its range up, Chevrolet will always be a dog. So we can see from here that Chevrolet does not, the Volt does not have much opportunities to adjust its competitive positioning until it gets this right. And this is the one that's preventing Chevrolet from being successful. So compared to Tesla. And so we see that Tesla has a lot more opportunities to change its strategy than Chevrolet has. And so we can now venture into commentary about the Volt. Spending 1.4 billion to move the Volt from scope economies, sitting off GM's existing manufacturing capability to a specialized manufacturing capability, is not going to solve GM's growth problem. Its growth problem is coming from here. So GM's first priority with the Volt is to get it out of this uncertainty. It has to move it down to clarity. And the only way it's going to do that is by increasing the range. Only after the Volt's range has been increased can we expect the Volt to move into the high market growth range. So GM, be careful. Well, I hope you enjoyed this case study of Tesla versus GM Chevrolet's Volt. You can see the value of having more than one company in the business management layer, so you can compare and contrast and get some idea of the robustness of your decisions. And we can also see that probably GM spending 1.4 billion is not going to help the Volt, not at this stage. And it tells us those kind of lessons. So if you buy the book, go try it out, test it, and let me know what you think. Else, if you need a consultant to help you half-day work out things with what's happening in your company and how to clarify what your strategies need to be, call me. Thanks. Bye.